Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Monday, May the 3rd, 2010. The market rallied today, but it's all bogus, and we'll show you why. Let's start off looking at the NASDAQ. See this big gap right here? Yeah, bogus. Plain and simple. Don't trust it. Don't like it. Wouldn't buy it with your money. Plain and simple. You do not trust that. You do not buy that. You've got lots of gaps below. This tells us this entire run, this 8-week period right here, was bogus, was overextended. You don't trust these major gap situations. You just put in another one right here. I wouldn't be buying that. Plain and simple. Let's look at the Dow Jones and look at the VIX. Here we have the Dow Jones basically moving sideways, doing that little kicking pattern. Kicking patterns happen at tops and bottoms, and this ain't a bottom. So you're seeing the same trend happen again. But notice today the market rallied 143 points, basically recovering almost all of Friday's losses. But then you compare it to the VIX, and it doesn't show as bullish a picture. The VIX is actually doing quite well. We closed above the upper Bollinger Band line on Friday, gapped up today, and then sold off. Well, that would make sense to sell off back below the Bollinger Band line, but you'll notice the high and the low both consecutively higher than the previous day. That's a clearly well-defined uptrend. Very simple. I like that. I'd still be a bull right here. Hey bulls, you guys know how you like to say the trend is your friend. Well, here's the trend, and it's my friend, but it's in favor of bears, huh? I like that. Higher high. Yeah, I dig it. Okay, so I would not be trusting the bulls in their trying to sell you the shares in the Dow Jones Industrial Average right now. That's not a good place to be buying. I would stay bearish this market. I'd also like to be looking at gold. Last week we started recommending gold stocks and ETFs. This is basically why. You have, let me get the right tools out. You have a really strong move in gold, then a nice period of consolidation. Note the lower highs trending lower, while low points also trending lower. And then we got to this nice hammer candlestick. I tell you guys all the time, man, watch them. Whenever you see the hammers, I like those, man. Turns right around. There's your bottom signal. New high breaks out of that guy. So you got low, consecutively higher low, high, consecutively higher high. The trend has reversed right here, and you just trade her up. And when you see the breakout of the previous high, you got a pierce right there. That's just an early warning sign. You want to see it close above it. We saw that right there 5 days ago, and now we've been recommending the long, and she's got a good move higher here pending. And you've also got next line of resistance is the previous high. So that's where you've got there. That's why we're really bullish there. Also, with all the news about Europe and their debt crisis there, which is again not over, it really puts a floor for gold right here. Also, we have debt issues in the U.S. I know people don't want to hear it, but we really do. Moody's came out a couple months ago and basically said if the recovery is not as robust as hoped for, we're going to have to downgrade your debt, the U.S. debt, take away that AAA rating, and that would really put some damage on the U.S. economy, or the financial position of the U.S., and that would of course hurt the dollar and would be reflected in the price of gold. You've got a lot of reasons there to be bullish on gold right now, and I really don't see any reason for a major sell-off in gold right now. So yeah, I'd stayed long in that. Let's go over some items that we're going to be covering later this week. We're going to go over the Fed's interest rate. For 16 long months, the Fed has kept the rate at zero or near zero interest rate, quarter point, 250 basis points. Anyway, the main thing is it's gotten to the point, like I said before, at first he did it and everyone's happy. Then you continue that policy and you get to a point, at some point you cross a line where you start to lose credibility. And this is simply because other countries are coming out and they're saying, okay, we had our rates slashed, but we're seeing a recovery, so we're going to go ahead and start raising our rates. All right. Now, if other countries are doing this and have been doing this, you have to ask yourself, well, is the Fed, well, why do they come out and say that we're seeing recovery, but we're keeping the rate at near zero? You're either lying or you're lying. I mean, as more time goes by, the more that red flag keeps getting waved in my face. I keep seeing that over and over again, and I've got to really question the sustainability of our rally. Now, not just because I'm a bear. I'm a bear simply because the indicators are telling me that now the time is to be going short. But look at your the data that came out Friday. It confirms it. You had a GDP of 3.2. Well, this is the first quarter, the second quarter are supposed to be your strongest quarters because of government spending, government incentive plans, and the third and fourth quarter is supposed to be the weaker of the quarters. Well, if you were looking for 4 to 5% GDP growth with government stimulus and you only get 3.2, man, that's bad. I don't really know how else to say that. And if it's not bad, it definitely is really, really bad for the third and fourth quarter. So I'm not seeing recovery here. I'm seeing, yeah, so we're seeing some growth like we talked about before. Go back and watch previous videos. We talk about, yes, you're going to have some spending because of this. And compared to first quarter of 2009, yes, that would make sense. But again, we're not seeing what Moody's was calling for. And that puts our debt rating back in focus. Now, let's assume that they don't have the guts to actually lower our credit rating. That's fine. They have drawn themselves a line in the sand by making that statement. And because of making that statement, if we have a double dip, like I'm calling for, you're going to force yourself, they've backed themselves into a corner where they will be forced to come out and lower that rating on the U.S. debt. So, if I'm honestly saying we're going to have a double dip, which I am, and that's what the charts are telling me, then I have to conclude, based on Moody's statement, it is highly likely that they can lower the debt rating on the U.S., which has many issues, many ramifications of its own that we need to be concerned with. Now, that's not all. But wait, there's more. If you consider the oil issue we're having off the Gulf Coast right now, it's bad. But if it makes its way around the makes its way around Florida, the tip of Florida, and moves up the eastern seaboard, it's going to be really bad. Unemployment at 10% will look like a good thing compared to what we're going to end up with. The ramifications can't even be cataloged. It's too deep of a chess set for us to actually look at and say, oh yeah, I see all the moves. No, you can only see some of them, but focus on the strongest ones and you'll be right. So we can see that unemployment will be going up. We can see cost of a lot of goods will be going up, especially if it starts to block off major shipping channels. So I definitely want to keep a sharp eye on that. Right now it's bad, but it could get astronomically bad, okay? Keep an eye on that also. Again, the European debt crisis, that is still my #1 issue. It's out there, but they're trying to play it off right now and say, don't worry, we're going to take care of it. If you go back and watch previous videos, I told you they cannot take care of this with money. The traders, the bond traders will go to the next country and the next country and the next country, and this is how the game is going to be played. So be looking for more headwinds for the market right here. I would not be a bull here unless it was in commodities, gold, silver, oil, that type of thing. Otherwise, I'm a bear, plain and simple. God bless. Enjoy the evening. And as always, refer your friends to our website and share our videos. Also, keep those comments coming. I love talking to you guys. So, yeah, post your comments and I will, comment back. Otherwise, I got nothing to do with my life, I mean, you guys are my life. I love doing what I do, but I can't do it without you. All right, let's look at our disclaimer right quick before we go over some more details. As always, the information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation. You know what it says. You can read it. And I would like to encourage everybody to continue to refer to friends, subscribe to our YouTube channel, and share our videos, man. We don't care if you put them on your website. You can put them on Facebook, Twitter, YouTube. I don't care what you do with them. Just keep sharing them with your friends because that's how we get out there and we get known and it helps us. And then the more we get helped, the more we get to help you. God bless and enjoy the evening.